Okay, listen up. Wall Street thinks that real estate prices for residential homes is overpriced. I'm reading this article. It's really interesting actually how they're describing, the methodology of this. So if you're a buyer or seller, watch this video. It's going to show you a little deeper look into why home prices might be overvalued and by how much. So look, if you're a buyer, you don't need to be told that home prices are overvalued, right? You know that prices are pretty high. I'm sure you've experienced it. And I'm sure you've seen the good deals when they come up, which are just basically affordable. They're not good deals, they're just normal priced homes. But the institutional investors like Invitation Homes, for example, and American Homes for Rent, these are huge players who have, tens of thousands, if not hundreds of thousands of single family homes on the rental market. They pretty much buy to rent. And their stock prices are trading at a discount. Invitation Homes is about 20% discounted. American Homes for Rent is about 35% discounted. That's the first indication that Wall Street, people who buy and sell these stocks think how much really home prices should go down, right? That's not to mean 20 or 30%. That's the valuation of the stock. But it is an indication that they think it is overvalued, right? Which is why it's trading at less than what it should be. If the prices of the homes that are currently listed were the real prices, then these would not be trading at a discount. So put it another way, in the markets where these two companies own, if a home trades for $415,000 on the open market, it should be somewhere closer to $310,000. That's pretty extreme. That's like going out there, looking at any listing and then making an offer at 33% off. That's kind of crazy. You're just going to get a whole bunch of rejections. So, the sellers are who dictate the prices, and I don't think the sellers are ready yet to be that low. I don't think they're ready to acknowledge the fact that they're going to be sitting on the market quite a long time. From my experience as a real estate agent in Sarasota, Florida, by the way, I have seen most things sell for between 5 to 10% off from the most recently listed price. And also, I'm seeing a lot of price reductions. And if a large and persistent gap stays open like this between the valuations, it's really just a recipe for price reductions, for not a market crash, but a market correction. I think if we were to survey 100 people, 1,000 people, 1,000,000 people in America, and the question would be, are home prices overvalued? I think like a high 90% of them would say yes, they are. And you would think that with this discrepancy, that it would be just a quick adjustment to home prices to bring it back into equilibrium. But as you know, real estate is an asset class that is really lagging. So many things is lagging in real estate. It always takes so long for the real estate market to adjust to the reality of the economy because it's dependent on people, and people don't want to admit, that's one of the reasons. People don't want to admit how much prices have fallen. People don't want to admit what the true value of their house is. And as a listing agent, I can tell you, everyone overprices their home. It's pretty rare to see someone price it to sell, and I mean within 30 days. Let's say sell it within 30 days. Most people test the market. Most people try to get a higher price first, and then they settle for a lower price. So how many homes are these big investors buying? And in the fourth quarter of 2024, out of all the home sales that happened, these large investors only bought 0.3% of homes. So if you have 1,000 homes that sold, 3 of them sold to these large investors. So the prices aren't being kept up high because of these investors. That's the one thing that a lot of people say. That's one thing that I hear in the comments and even in other videos. People say, oh, these large investors are greedy people who are always making the prices go up. No, they're buying 3 out of 1,000, and that's what's causing your price to stay up and you can't afford to buy a home. I mean, that is not at all what the situation is. And guess what? These huge investors, these Wall Street investing companies into real estate, they are at the lowest buying levels since the last, for the last 7 years or so. This last quarter was the lowest one, taking away the post-COVID time, because right after COVID, the second and third quarter of 2020, they were at lower levels. But that was an anomaly, a crisis happening and a lot of uncertainty in the market, and everyone kind of stopped doing business as usual, right? But right now, it is just business as usual, and all they're doing is buying less. They're not finding the right cap rates. So let's talk about cap rates. A cap rate is basically what's like the yearly profitability. Let's just call it that. It's much more detailed than that, but let's call it your return on investment, okay? Most Wall Street investors want a higher return on their investment than regular owner occupants. That's the truth. You see, owner occupants are willing to pay higher interest rates. That's another example. Right now, the average interest rate is, I think, 6.93. Yeah, 30-year fix is 6.93%. But what are they for these large investors? 6.25. They have an almost, 75 basis point increase, like benefit compared to the average home buyer. And the average home buyer is willing to even sometimes overpay for homes, but not Invitation, not these companies. They're not willing to overpay. They're just going to pay the lowest they can possibly get a property for that meets their formula. And it is truly like a spreadsheet calculation situation, whereas a home buyer is in an emotional purchase situation. And with emotional purchases, you can easily overpay, easily. Like, what if the lot next to you, like this happened to my younger brother who lives out in Oregon, the lot next to him went available for sale, and he figured out exactly what to do to buy it, and he didn't discount it. He bought it at exactly what the seller wanted because it's his neighbor. So that's an emotional purchase, right? And this happens every single day by regular homeowners. Now, look at this chart, which shows what percentage of homes is owned by institutional investors that have less than 1,000 properties, over 1,000 properties, the iBuyers, which are like just websites that buy your property, like Zillow and so on, and owner occupieds. It's showing obviously that most homes are still owned by owner occupants. All these purchases happening, guess what? Owner occupants. So based on the data that they compiled, you want to know, how much are homes overpriced? Now, this is a general national thing. This is not like specific to Florida, which is where I'm at. The answer is easy. Between 10 and 15%. If home prices fall overnight, 10 to 15%, a lot of these institutional investors are going to get off their chair, start making some offers, and buying up more inventory.